Lars, over there, the gist of today is to gather our senior consultants and thought leaders to share their experiences. And that's what Fahrenheit's done for over a decade now, is help companies grow and solve problems and share ways to overcome those problems. Short agenda in terms of types of conversation. I'm going to hurry up and get out of the way so we can let my colleagues speak, but they're going to tell their story and give some advice from what they've seen, hopefully to help mitigate some damage currently. Not a lot of similar situations, certainly, but there are some comparable situations that we felt we've dealt with in the past that we can help. After that, going to talk about some actionable things to do right now, including some of this legislation that continues to come out, help digest that. And then the end goal is to get everybody back on the path of recovery, moving forward, contingency planning, et cetera. And then we have some questions that have already come in that I will help facilitate. And if you have any others, please let me know. So with that, Lud, you want to kick things off?
Yes, Jay, thank you. Can you hear me okay?
Good to go.
All right. The current situation has many similarities to the 2008 financial crisis, when I was hired by Gladstone Capital to be their operating partner, assisting some of their 40 portfolio companies. I was fortunate to be able to assist companies as diverse as cable TV, billboards, aluminum and steel distribution, and aircraft tooling get their operations right-sized and their balance sheets restructured. Let's jump right in with an overview of what you as leaders should take from this session. I'll cover 4 points. Start with the end in mind. It's always the people. Understand your break even, and monitoring and communication. First, start with the end in mind. This is a time for leadership like no other. That means organizing and harnessing the skills of your support network, be they employees, advisors, or outsourced support teams like accounting and legal services. If you have a vision statement for your organization, you need to restate that vision for the task at hand. You can do that today. You need to ask yourself if you're ready for this. Is this a lifestyle business or is this a growing enterprise? This is going to be hard. Make sure you and your family are ready. My next point is to find where you are in the cycle. Some companies have not even yet declined, whereas some dropped off a cliff. Every industry in every geography will have a different curve, an inverted bell curve, where business drops off, flattens, and comes back up to a new normal, which our government is trying to accelerate with their stimulus programs. So take a look at where are you on this curve, where are your customers on their curve, and your suppliers. Your plan won't work if you can't get the materials you need, or if customers are not buying. The strong will bounce back, the weak will fail, and this includes your customers and your vendors. So think through who they will be and prepare to work with the winners. Assume that your response plus the government stimulus will get you to an end point in, say, 6 months that is similar in volumes and margins to some year that you've had before as a reference point. Maybe it was 3 years ago, maybe it was last year. Think of this as your new steady state and use that year as a template to define your recovery vision. If you lose your employees, how long would it take to train a workforce to replace them well enough to achieve this recovery vision? This will help you decide who to keep on the payroll and who to furlough or lay off. My second major point, it's always the people. Start by looking in the mirror at yourself and your ability to select and deselect good team members. We're all reluctant to shed marginal performers and poor team players, and this is the time to face up to that. Who can best make this journey with you, and who do you want at your side when you reach your recovery vision? If you have a recruiting need, this is an opportunistic time where great talent will be in circulation. My third recommendation is look at your break-even analysis. Whether you've ever done a break-even cost, volume, profit analysis or not, you need to do one now. This is a key tool for scenario analysis and is your best window into planning cash flow under different revenue assumptions. Importantly, it forces you to define your fixed costs. And remember this, in the short term, all costs are fixed, and in the long term, all costs are variable. In the crisis that we're dealing with, long term may mean 3 months. And so we need to look at our cost structure as being completely variable. Importantly, this analysis provides you a framework for overlaying the government programs that move the fixed cost curve, be they SBA loans, grants, employee retention stimulus, or other. My final recommendation is about monitoring and communication. And I recommend, if you possibly can do this, that you establish what I call a recovery ombudsman, someone in your company accountable to gather, track, and help employees and the company get all the aid to which you're entitled. The government programs are complicated and they take focus. The recovery ombudsman job is to monitor and manage the roadmap to recovery. If at all possible, it should not be the CEO, because right now, the ombudsman is a full-time job, and that job entails overseeing applications for government programs, coordinating with human resources and any special record keeping that may be necessary, gathering data and reporting daily and weekly updates and status reports, following up. Where do you get this person? Look at your team and see who you have, who's good at details, numbers, follow through, and dealing with outside parties. Let's pull back up to a couple thousand feet on communication. If you don't have a 5-minute stand-up leadership team meeting every morning, then you need to start one and cover what got done yesterday, what are the 3 key objectives for today, and what is the top priority item for us to achieve. With the ombudsman managing the recovery roadmap, the CEO can make personal calls to customers, vendors, investors, and bankers. These calls will keep the ombudsman informed for their tracking purposes, so you will know where you are on the road to recovery, and it will increase the likelihood that the resources you need for recovery will be there when you need them. That does it for my summary of the steps you should be taking to get your business on the road to recovery. And I'll hand off to Doug Jones, who has successfully led the finance function at many middle market companies throughout his career.
Thank you, Lud. I'm Doug Jones, and I've been with Fahrenheit Advisors for 9 years, doing fractional and consulting chief financial officer work with small and middle market companies. I have clients in real estate and construction, professional services, distribution, and manufacturing. Before that, I was a chief financial officer for 25 years with middle market companies. And before that, worked for some Fortune 500 companies. So I have both big and small company experience. I will start by saying I have way too much material, so I might speak a little quickly. And Jay, you'll have to pull a hook out if I go too long. The saying for today is cash is king. Obviously, we've heard this before, but now it's true more than ever. Lack of cash or availability to cash is the one thing that can put a company out of business quicker than anything. I have a few quick ideas to help you. Some of these you'll hear from other speakers as well. Number one, if you haven't started already, you must start building a 90-day cash flow forecast. And I know there'll be a lot of guesstimating and it'll have to be adjusted over time, but it's better to start with something rather than nothing. So that's the number one priority that I would like to see everybody be working on if they're not working that already. Eventually, you may need to go longer than that, but 90 days is the start right now. Number two is some things to think about as you're looking at cash and cash flow. Some obvious, some not so obvious. Accounts receivable is the big source of cash for most companies. And remember, your customers and clients are trying to hold on to cash just as badly as you're trying to hold on to your cash. So you need to take a quick look at your age trial balance, and you're probably used to going after your delinquent customers and clients and chasing them for money. You of course need to do that. But I would suggest that you also look at folks who are current and owe you money coming up soon. As I said before, they're going to be looking for ways to slow down their payments. So you want to make a call to each one of them and make sure that everything is in place for them to make a prompt payment to you. This will be the time when you start hearing excuses like, oh, we need a copy of that invoice. Oh, we need your insurance certificate. We need the delivery receipt, whatever it is to slow things down. You want to learn about those objections now rather than waiting till the day the invoice is due and you say, what happened 10 days later? And then they start asking for what it is that they need. So get in front of that process right now. You also want to carefully consider new extensions of credit. We used to say there's, the sale isn't complete until it's collected. You may have to make some difficult decisions about who you extend credit to. And certainly if you're doing any kind of custom work for anybody, you should be asking for some sort of deposit. Other little things to look at, deposits on your books. You may have made deposits on equipment that you don't need now. You may have made deposits on a trip or conference that you're not going to do now. Make sure somebody's working on getting all of that money back into your coffers at this point. Lines of credit we're going to talk about also. Chip's going to talk a little bit about relations with your financing partners. I'll be talking about the various SBA loans. But if you have a line of credit in place right now, you want to make sure you're talking to your banker and having an honest conversation with them about where you are and what your potential needs will be for the future. That's the cash inside. On the cash outside, payroll is obviously a very big outflow for folks. And I can't stress enough how important it is to pay employees and their payroll taxes in a timely manner. Many of you know that not paying those is a quick way to end up in jail. There have been some ugly situations where company officers have been penalized for not paying payroll taxes. I know there are some extensions for paying payroll taxes at this point, but you need to make sure that you're paying your people and payroll taxes in a timely manner. Accounts payables, the other big source of cash outflows. Now the shoe's on the other foot. You want to be the one to slow down cash going out the door. And there's no shame in being a little bit of a stickler for details. You don't have the right copy of the invoice or delivery ticket or insurance certificate or whatever it is that you're looking for. You can ask for those things before you release payment. I would also suggest that folks formalize their process in terms of what payments are going out the door. Now is not the time for you to be relying on your accounts payable clerk to decide what's paid and what's not. First thing I would do is I would slow down or reduce the number of check runs that you're doing. Some people are paying people every day. I would cut that back to once a week and make sure you're having a management discussion over what gets paid and what doesn't in what order. Then another thing, and this is a little tricky, but if you have a lot of ACH payments where money is coming out of your account automatically, some of those are contractual and your vendor is giving you a certain price deal because you're going to pay them by ACH. And those you can't just change without talking to your trade partner. But if you've done some of these for convenience, just to make it easier, you might want to take those off of ACH so you can control when those items are paid rather than having your partner decide when those are due. The other outflow, debt payments and rent. Again, communication, we've talked about this and we'll talk about it 100 times. You should be talking to your lenders. You should be talking to your landlords about possible payment holidays or deferrals or extended terms. Some will say no, some will say yes. Whether your landlord says no or not will probably depend on whether he's gotten some room from his bank or other lender to slow down on payments, but it can't hurt to ask. Third section I want to talk about is the recent government actions to help everybody through the rough patch. And I will tell you, when I started this presentation last Friday, I figured I was going to have a nice, neat presentation on the new loan programs that are out there. But the ink is still drying. Additional regulations have to be issued by the IRS, the Department of Labor, and the SBA to implement some of these. So there are very few final answers. There's also a lot of misinformation floating around, based on draft versions of the law, or just plain bad interpretations, or especially in the popular press, oversimplified interpretations. So my rule is I don't believe something unless I've seen it 2 or 3 times from 2 or 3 different sources, because I've gone down the wrong road on a couple of these things over the weekend, only to find out some other folks were mistaken. Couple things in the legislation. Remember, the legislation is intended to help employers keep people on board. But if they can't do that, there is enhanced unemployment. I think most folks know now that unemployed workers can get an additional $600 per week above their state benefits for unemployment anytime between January 27th and 31st. It's our understanding that partially unemployed people whose hours have been cut, will get a pro rata piece of that 600. So as you have to lay off or furlough or reduce hours of employees, it's important that you let them know of that benefit, and they should be applying as soon as they possibly can. In terms of the programs to keep people on the payroll, there are actually several. There's one schedule change, one incentive, and 2 types of SBA loans. The schedule change is the delay of employee portion of employer taxes. For 2020, you can actually pay those employer taxes in 2021 and 2022. That benefit, however, isn't available if you take one of the SBA 7A loans that we're going to talk about in a minute. The other incentive is the employee retention credit. You also cannot take advantage of this if you get an SBA 7A loan and are getting debt forgiveness. That's a credit against your payroll tax, 50% of wages up to $10,000 per employee. And there's some specifics about who applies and who will be able to take advantage of that, and we need to read the fine print for those. Then there are 2 loan programs. The first one is the Economic Injured Disaster Loan, which is up to $2 million. We are hearing, though it's not yet in official writing, we are hearing that the limit is going to be based on 6 months of a company's operating expenses. That will be the max that you'll be able to borrow, up to $2 million. Interest rate's going to be 3.75 for terms up to 30 years. There'll be no personal guarantee required up to the first $200,000, and any available assets will act as collateral. The EIDL is applied for directly with the SBA, not through a bank. So you actually need to go on the SBA website. Our understanding is that the process for applying has gotten easier over the last week. It was pretty burdensome, but I've had 2 cases this week where it's been a lot easier for folks, so that's good. The other loan program is being called the Paycheck Protection Loan. This is the one that everybody's talking about, because this is the one that supposedly has debt forgiveness capabilities, and it does, subject to some limitations. This is a loan that is a maximum of 10 million, the lesser of 10 million, or 2.5 times the average monthly payroll based on your last year. So if your monthly payroll was 100,000, you could borrow 250,000. Rate is not to exceed 4%, 10-year term. And since this is part of the SBA 7A program, it will be administered by banks, not directly to the SBA. A little heads up there, the progress on this will be frustratingly slow. Under the law, the SBA has 2 weeks to come up with the implementing regs. You can use the funds under this loan for salaries and wages. healthcare benefits, mortgage interest, rents, utilities, and interest on existing debt. And the good news about this one is there will be no personal guarantee, and no collateral. The potential loan forgiveness comes in, and this is where I get everyone's attention. And this is also, by the way, where your employees are hearing not totally correctly that, oh, the government's paying my salary for the next 8 weeks. That's not 100% true. The forgiveness is, in fact, for up to 8 weeks of the eligible expenditures, but it's reduced in 2 ways. And they're a little bit complicated, so I won't go through all the math, but if you have a reduction in full-time equivalent employees over some base period, which is very often the prior year, there'll be a proportionate reduction in your debt forgiveness. So if you cut your payroll by 1/3, your debt reduction would be cut by 1/3. There also can be a cut in the case you reduce employees' salary, individual employees' salaries by greater than 25% over the last quarter. That will reduce the debt forgiveness as well. So it's not a free lunch. You have to comply with some things. In some industries, it will be very hard to comply with those because you've already laid off a lot of people. It does give you the ability to bring those folks back and still fall in under this loan, but that I don't think is going to make sense for a lot of businesses. My thinking has evolved over the last week or so, last weekend. As a finance guy, I was really focused on the debt forgiveness. How can we maximize debt forgiveness? And in fact, that's important, but at the end of the day, you're going to probably have fewer people than you had during the base period, either last year or early this year. That's just a reality of business at this point. So if you in fact lay people off and they're able to get the enhanced unemployment benefit and you get some of your loan not forgiven, what do you have? You have a 7A loan with a 4% interest rate, 10-year amortization, no personal guarantee, and no collateral. Doesn't sound like a bad way to go. So I'm thinking most folks will be interested in that 7A program. So bottom line, since it's going to be done through banks, I would let your banker know as soon as possible you'll be interested in that 7A. And right hot off the presses, I heard just an hour before we got on this call, I heard that there may be the possibility for people to apply for the SBA loan, the emergency disaster loan, and ultimately convert it into the 7A loan. I can't say that's for sure, but if that's the case, if we find that to be the case, then I'm going to suggest that everybody go and apply for the disaster loan because they can convert it later. Disaster loan will work for some people. That's a facts and circumstances thing. We'll need to look at people's specific cases on. Then on the other hand, just to show you the kind of information that's floating around. So I heard that this was going to be something you'd run through the SBA while they were working out the arrangements for the bank. And from another source, I heard that the SBA is going to come out with their forms and guidance in the next 3 days. So we really don't know, and we're just going to have to stay on top of that. But clearly make your banker aware you're interested in 7A, and we'll keep on top of what new rules and regulations are out there. I think I have probably used more than my time, so I'm going to turn things over to Jim Woodward. Jim?
There we go. I'm unmuted. Thank you, and good afternoon, everybody, and thanks for joining us. So a little bit about me. I spent about 30 years, a little over 30 years at Media General and held several senior leadership roles there in HR, operations, and my last post was CFO. And at the time I was CFO, our stock price was $1.50. Lenders were barking at the door, and things needed to look up. And we ended up selling Media General at about $24 a share. And so after that, I went to become the CFO of a telecommunications company that was in wireless, broadband, and fiber. And so during my time at Media General, we had to plan for several potential pandemics. Fortunately, they never materialized. So my comments today are going to be a little more of at a higher level, and really are some things that I believe that, companies should consider, especially now. If you haven't already, these are some things. It's never too late to really just step back and consider this. And now that, this, what we've got is both what we have is the national healthcare crisis that is leading to an economic crisis. And while we're all doing our part today to help solve the healthcare crisis by doing this, as business leaders and owners, we, I think, sometimes have an even greater role in helping our employees and our local economies. And look, I understand circumstances between industries are going to be different, and sometimes even businesses within the same industry are going to be different. However, these are some things that we always found interesting to consider. So the first thing was, you want to talk about refocusing or re-examining your business strategy. You were successful under the old norms. You were running your business and things were going well. I mean, the market was hot and everybody was going well. Well, now is the time to step back and refocus or re-examine your business strategy under what may, for both the near term and long term, for what are likely to be both new social and business or economic norms. And how are you going to prepare your business to survive and thrive in with those new norms? So, and part of that discussion when you're going through your ongoing, the strategy is you have to think about how you're going to adapt or adjust to meet what's going to be new demands of a marketplace and a consumer or customer. Your business has skills, has expertise, you have products. Now's the time to think about, okay, well, how are they going to translate currently and in the future based on the needs of the market and the consumer? How am I going to change for example, product delivery is often one of the first things to change. People consume products differently. To use some very small examples, the drive-through industry, when drive-throughs, you're consuming a product differently. There's thousands of those examples. But now's the time to step back and think about how your product can change and how you can change along with your product. And as an interim step, and I believe a longer term step, you need to develop some contingency plans. Plans to address what is, an uncertain future. And because it's uncertain, you may say, well, what I plan against or what I plan to. Well, just the process of doing the planning and the thought process will make you more nimble and more agile. And you'll be able to adjust to that. But the planning process or the contingencies, for example, what are your plans to keep your employees and your customers safe? What are your plans to broaden and diversify your supply chain, as we've already talked about? And how am I going to let my employees know and give them confidence that it's okay to come back to work, and as important as my customers, that it's okay to do business with me, that you're safe? So those are the types of just some of the examples of contingency planning. So in my last point, I was happy to cede some time to Doug, it really leans on the previous points I made and those that are being made by my colleagues, and including what Chip's going to go over. And I believe it's one of the more critical things that we can think about in times like this. And that is, I believe that the most successful companies that will come out of this will have gone down a planning process and a stage to think about how they're going to maintain and grow the confidence of their employees and their customers, how they're going to strengthen that. We all have a brand, but how you're going to strengthen that brand and even your loyalty from your customers and your employees. You know, in times of crisis like this, it's often, you know, now that we've had time to adjust to it and get the shock, you know, people are looking for leadership. They're looking for, you know, okay, what do we do now? And as leaders of your company, you know, these are some of the ways that I believe that, you know, we can change the conversation a bit and give people confidence and, you know, at the same time, reimagine and grow and prosper our businesses, maybe not in the next 2 weeks or 3 weeks, but we will come out of this. And when we do, you'll want to be ready. So when I thought about this, I thought to sum it up, and before I turn it over to Chip, you know, it's going to take resolve, resilience, and maybe some reimagination. And that's going to help your business when it returns to normal, albeit it could be a very different new social and economic normal. And these are some of the processes and thought processes that we went through at Media General when we were planning for, you know, SARS, MERS, bird flu, and we use some of these processes on an ongoing basis, but you really dust them off. And even if some of you remember the anthrax scares, we were very much in the receiving end of mail. And while we were fortunate never to receive any anthrax, we had several scares, but we were ready for it. We had containment. And that gave our employees confidence that, okay, it's okay for me to open the mail. It's okay for me. My company has my back. So, you know, with that, I'm going to turn it over to Chip.
Thanks, Jim. Appreciate the chance to get with you here this afternoon. I'm Chip Bowman. I'm the managing director for business development here at Fahrenheit, and also a delivery consultant. I spent the early part of my career in corporate banking, and most of that time was dealing with distressed debt portfolios, various companies, you know, everything from large corporate to venture capital and private equity owned companies. So I just wanted to talk today a little bit about some tips and some things I learned in that process. After leaving banking, I got into turnaround consulting and joined in with Fahrenheit 3 years ago. So one of the things, one of the quotes that I kind of always hold dear in times like this, which are clearly unprecedented. You know, I'd say for almost everybody in the country, we've never experienced anything like this. I remember hearing stories from my grandfather about the Spanish influenza, and you know, I can only imagine that this is closer to that than anything that we've ever seen. But Peter Drucker, who's a well-known management consultant, said this. He said, "The greatest danger in times of turbulence is not the turbulence itself, it's to act with yesterday's logic." And I think we have to all, as business leaders and service providers to business leaders, we have to think differently in this current climate. Like I said, this is unprecedented. You know, I think each and every one of us have had to stop our heads from spinning as we figure out what we need to do for our own businesses as well as the businesses we support. One thing too that we have to keep in mind is each situation is unique in this particular business climate. Not every decision can be applied with a cookie cutter. In fact, I think for each of us, what we're going to find is we need help in thinking through what we need to do next. So some of the things I learned in working with turnaround situations, and in particular being on the bank side for a long part of my career, is having a plan is the key. People want to help. People also want to get repaid. So when you're dealing with stakeholders that have either lent you money or invested money or have a liability to you, you know, they're in it to get paid, of course, but they also want to help. But they really need you to have the plan for what you need, because they don't know what you need. So as you think about your plan, couple things to keep in mind. First, don't panic, but you can't ignore what's going on around you. You have to write things down, size up what's changed. Ideally, if you can put some dollars and cents to those, it helps put it into perspective. And, you know, in this particular situation, like I said, and somebody earlier said, you know, some of us have been clicking along business as usual. It hasn't really hit us yet. And others, it hit like a brick wall. You know, just think about, you know, even inside like say the restaurant industry, you've got restaurants that are doing just fine because they've always had a takeout business. That's their deal. But then you have others that, you know, literally overnight were subject to a pause button being pushed. And so they're trying to figure out, you know, what do they do? So size up what's going on around you and what the impacts are on you. Put dollars and cents to it. And also do the same thing with your resources. Size up your resources. What do you have available to you? Doug talked about AR, AP, cash is king, but that's just one of the things. You know, think about partners that you've got. Think about assets that you have that you might not need anymore. Think about insurance coverages that you've put in place over time. Doug talked about some of these government programs, which we're trying to stay at the front edge of the tip of the spear on those, but there is a lot of guidance to be had on that. So we'll do our best to keep you up to speed and answer questions along the way. And lastly, what I find is usually in that plan, what you're trying to achieve is some level of a pause. How do you get a standstill? How do you achieve a pause while, especially in this particular situation, while the world goes back to normal or some level of normalcy? We don't know what that'll look like yet. It's too early to tell. And it's also, as we all know, we don't know when it'll happen. You know, it hopefully will happen sooner rather than later, but we have to plan for how we pause. So as you think about your plan and the things you need, think about what things would help you achieve that standstill. If you could fast forward, say 90 days and not have lost much ground. And then those are the things that are going to form what you ask of your partner. So as we talk about stakeholders and management, you want to go to them with a plan. One thing I learned is nobody likes surprises. So above all else, make sure you're not surprising people. Communicate clearly and often, and be clear about what you need in order to help. Jim talked a little bit about finding ways to play some offense or pivoting. So think about your business. What are things you could do differently now? But evaluate those things critically and make sure they're achieving the desired pause that you're trying to affect. And then the last thing, and I can't emphasize it enough, is communicate with your stakeholders. Draw up a list of who they are, creditors, partners, friends, but communicate often and communicate clearly where you are and what you need. It's not good to be quiet. It's okay not to have all the answers, but being silent is not a great strategy when you're dealing with stakeholders. We are, and you know, every situation, as I said, is different. But you know, your credit stakeholders are wanting to work with you to achieve what you need and get repaid. But they need you to give them some direction on what you need from them. If you ask for too much, they're going to tell you. But if you don't ask for enough, you might not get what you need to help make it through it. The last thing I want to say is I'll leave you with this. when I've done turnarounds and when I've done debt recovery, you have to know what your core principles are. And especially in uncharted times and territory that like what we're in, you need to know what your principles are. Why do you need to know that? Because oftentimes you'll find yourself somewhere where there's no playbook, there's nobody to tell you what the right decision is. But you want to be clear that if you're doing anything that comes close to or kind of rubs up against your core principles, then you want to stop and think about it and decide if it's the right thing to do. And lastly, if it were to violate any of your core principles, you want to stop and go back to the drawing board. So those are just some tips that I've learned in my time doing turnarounds and working with stakeholders. Again, communicate. I can't emphasize it enough. And ask people to help you develop your plan and think through it. Involve other people in your business. If you've got trusted advisors outside of your business, involve them in the equation. If you ever want to talk about anything, my phone's available. Just give a ring. Happy to talk through anything you need. Thanks for being here. I'll pass it back to Jay to go through some Q&A. I think we're a little bit behind schedule, but not too far off. So thanks so much.
All right. Thank you, Chip and Lud, Doug, Jim. Great stuff there. So Q&A, I'm going to start. Doug, I'll start with you kind of on a micro. What can we do today? Immediate question. As our new Fahrenheit's political correspondent, where do people get this information aside from you? And how do they apply to get the care money application? Where does one go immediately to do that?
Yeah, one of the best summaries that I've seen, it's very readable for the CARES Act 7A loans, is actually on the U.S. Chamber of Commerce website. I just saw that today, as a matter of fact. And it's a 3-page, I think, document here that kind of runs through the steps. So, and some of the formulas. You may need some help working through some of these, but I think this gets you started with understanding the process. So that in terms of the application process, as I alluded to before, and perhaps something's come out while we've been on this call here, but as of this morning, I heard everything from the SBA will have application package out in 3 days to 2 weeks to, because they know it's going to take a long time, they're actually going to have you apply EIDL, the disaster loan portal. So I don't know the answer to that yet. I do know there were some difficult times on the SBA website with the volume that they had a week ago. I can't imagine what's going to happen if they send everybody that was going to go to the banks directly to that site, but we'll hopefully know more on that soon.
Thank you, sir. And we'll distribute everyone's information. So if you need to reach out or want to reach out to Doug directly regarding some of those specifics, we'll make sure we can make that happen. Lud, something you talked about, and we talked at length about the recovery vision. I know in a consolidated format like this, we didn't get into too much detail. Can you just hit the high points of that and what you mean by that and how it can help us now and moving forward?
Sure, Jay. So you've got to paint a picture particularly for your employees and also for your customers and vendors, but particularly your employees need a picture of what does it look like as we come up the curve and recover and get back to business, which is not going to be business as usual anymore. It's going to be different. Right now, people they're hungry for hope and for clarity. They're hearing, I'm not going to have a job. I have no idea if I'm going to have to pull from my 401k plan. And to the extent that as leaders, you can paint a picture of where you're going, it's going to give them confidence and definitely strong allegiance to you. I mentioned looking back at a prior year, if you've been in growth mode, because it really facilitates the conversation. For example, I was with a firm recently and we talked about how they need to scale back to about half of their volume. And they said, hey, remember 3-4 years ago, we were at that volume. What did we look like then? How many people did we have in which departments? What customers were the same customers that we have now? And it created a concrete vision for people so that they had a direction that they were going, and it helped put the pieces in place. And most of all, it gave confidence that this is something that we can and will achieve.
Great, thanks. And just a reminder, if you have questions, you can send them to J Carpenter, the letter J Carpenter at FahrenheitAdvisors.com, or just use the chat function you should see in the bottom right-hand corner of your RingCentral app. Jim, I'm going through a lot of questions coming in here, so I'm doing my best to kind of adjust here. You have an HR background as well as a financial background. And we Lud talked about different places and companies timeline where some have, I think you said, fallen off a cliff. When you describe resilience, how do you talk to folks? How do you talk to your stakeholders? How do you talk to your employees? How do you tell them to be resilient when they're at that point in the lifeline?
So I'm gonna play off of something Lud said. I don't think you're asking me. So my opinion, you would never look an employee on and say, "Hey, be resilient." You have to exhibit resiliency. You have to illustrate it and show it, and then you can use the word with credibility. But to what Lud said, look, they're begging for it. They're out there. People are not hearing any good news. It's doing some of the things that I think we've all talked about gives your employees and your customers and everybody, look, we're not going to be a victim here. We're going to lean into this thing and we're going to figure it out. And no, I don't have all the answers, but we're going to figure it out. And there's a process to figure it out versus just going about it by the seat of your pants, so to speak. But I don't think I would ever tell my employee to be resilient. I'd have to illustrate what resiliency looked like as a leader.
Gotcha. I feel like I'm the guy on the Red Zone channel going back between different games and have to figure out what we're doing here. So Chip, going to circle back to you and your conversation around stakeholders and communication. Step one, how do you identify stakeholders? How do you make sure that list is exhaustive? Are there resources? Where would you start in that process?
Sure, good question. So one of the best places to start in trying to identify your stakeholders is look at your financials. Who do you owe money to? That's an important set of stakeholders. Inside of that particular segment of your stakeholder group, you could have lenders, you could have vendors, you could have some investor types. Maybe they've lent you money or they've put equity into your business. You also, depending on the nature of your business, will define where those stakeholders might lie to. But your landlord might be a significant stakeholder in your business. Your employees, your family members, to the extent they're involved in the business, or are certainly a part of relying on the business for your and their well-being. And then also think about your stakeholders as it relates to folks that might have legacy ties to your business. If it's a multi-generational business or you've acquired it from somebody else, they might not have a financial stake in the business any longer, but they certainly have a stake in the business's name. But a great guide is to look through your financial, just kind of look at the line items on it and say, is there an important party there that I need to consider? And then one of the things that's also helpful is to try to prioritize those stakeholders. Some stakeholders have more of a say in what goes on. Your bank, for instance, might have a lien on all your collateral, or your landlord might have the keys to you being in business every day. So you just want to make sure you kind of look at that list and say, okay, who has the highest priority as far as how I need to communicate in that sense. So yeah, that's how I would go about building that list up.
Great. Doug, I'm going to come back to you in regards to the 7A loan. Should we start preparing payroll, rent, and utilities? Assuming yes, how far back? And is this a good use of time?
Yeah, yes, it is. And just as we are running around trying to figure this out, your bankers are doing the same. And we've seen samples of a couple of things that have come from various banks where they're, I guess, trying to guess what it is that they're going to need, maybe with some insight from the SBA. But if you have a bank relationship, call your lending officer and say, hey, do you have a prototype or a list right now of the information that you think we're going to need in the 7A? Some of them already will have it. Some of them will say no, but we'll get it to you as soon as we can. So that's where I would start. If you have a banking relationship, that would be a good way to go.
Great. And Jim, when you were talking about your contingency plans, talk to us about how you would get started with that. What that looks like in the first few steps of that process, if you don't mind.
So to start with the contingency planning, you got to parse it. Like, we're going to think about contingencies in, I think of them as buckets, right? So I'm a contingency plan for my operations and / employees, right? First and foremost. Then I'm gonna think about a contingency plan for my customers. And, as Chip and Doug have talked about, there's also a lot of contingency planning around the financials. But so once you kind of develop those kind of the buckets, like I'd say, you would say, okay, what am I trying to accomplish here? The one I mentioned is something that I believe is going to eventually be important to all these businesses, is confidence. So let's say you're running your business today, you're open and you're running. One of your employees comes down with the virus. You have to tell all your employees, right? Well, how are you going to give all the rest of the employees confidence that it's okay to come to work tomorrow? Right? It's okay.
Yeah.
So those kinds of things, and those are more near-term types of things. And then once you get into those, because those are the ones that are likely to come at you first, then you would start into the growing your business and meeting the new demands of the marketplace and the customer is from a contingency standpoint. It's a little more complicated than that, but
sure,
answers the question. If not,
yeah, absolutely. So we're almost up against it at 5 o'clock. So let me just do some housekeeping. Again, if you have other questions that you didn't want to answer or didn't want to ask here, feel free to email us. Maybe easier, just info at FahrenheitAdvisors.com. That'll get to everyone and we'll get your answers. We will distribute this recording as well if you want to go back and listen to it. And we'll distribute contact information of my colleagues and the panelists here today, so that if you have specific questions based on what you heard now, down the road, they are happy to help. Other than that, feel free now or down the road. Again, we're here to provide answers. So if you have questions, please reach out. And I won't find the answer, but these guys will do it for you, and we'll make sure you're made whole. So thank you all for being here. I think we did a decent job, 4 to 5, covered a lot of ground, and happy to review any of it in detail with you. Stay safe, stay healthy. Anything, guys, from the panel?
Thanks for joining us.
Thanks for joining us. Be safe.
Thanks, everyone. Stay safe.